Marion Roberts returning to profit in its first half with headline earnings per share of 69 cents. That's from a loss of 190 cents in the previous period. The construction group saw revenue increase by 8.5% to 16.3 billion rand, while it maintained its order book at 48.3 billion rand. Marion Roberts expects the improvement in earnings trend to continue. Well, let's delve into these results. We've got Henry Laas, CEO of Marion Roberts, and Byron Laas, Portfolio Manager at Vestac, joining me at the desk. Thanks so much for joining us today. So Henry, looking at this, of course, congratulations. This, of course, good news to deliver to the market. Was it an improvement mainly in volumes, or was it an improvement in margins? How would you describe that?
I think it was mainly an improvement as a consequence of not having major losses on contracts. In the previous reporting period, we still recorded significant losses on GP MOF in Australia, and we also had losses coming through from the business in the Middle East. And the fact that we didn't have that in the current reporting period is the main reason why we saw the improvement in our results.
Now, looking at the order book right now, saying you've maintained it at 48.3 billion rand. Tell us about your strategy when it comes to taking on new projects, where you're focusing your energy, and kind of break that number down for us.
If you look at the order book, the first thing to note there is that the split or the weighting between international and local orders have changed. 60% of that contribution to the order book comes from our international business. So our focus at this stage from a growth point of view is primarily around our mining business, as well as the investment that we have in Australia in oil and gas. That's where the strength in the order book is coming from. Business in South Africa is maintaining the levels of the order book that we had in the past. And in terms of the approach to projects, it is still extremely competitive in South Africa, so the position has not improved in the recent months. But we do expect some improvement in time to come.
We knew that Pravin Gordhan was going to mention infrastructure yesterday, and he mentioned 827 billion rand is what the country wants to spend in the next 3 years on infrastructure projects. Is that money coming through yet in the system?
Well,
are you seeing it?
Firstly, it's not the first time that this was announced. Government has previously announced this amount as well. So we've been waiting for this for quite some time. I must say we haven't seen significant projects coming to market for us to participate in. What has happened in the Transnet area and the Prasa area, there's a lot of renewal happening on the rolling stock side, but that is not really opportunity for our business. But we haven't yet seen major road projects or major construction projects coming to market.
I mean, Byron, we've seen some good numbers coming through from construction companies and a welcome reprieve from the last few years. What's your view now on what we're seeing from the company perspective?
Yeah, if you look at Pravin's speech yesterday, he actually mentioned the word infrastructure 30 times. So he really emphasized that.
Did you really go through that?
No, there's a little function that you can search the word, so I did that. But obviously, the question has to be asked, where's that money going to come from? You have a look at how much money they're looking to spend and how much revenue is coming in from government, and there's definitely big deficit issues, and that's probably why the rand has weakened so much. I mean, just a question for Henry. When you have a look at that order book that you spoke about earlier, a lot of that, I think about 47% is exposure to Australia. And in the resource sector, how do you see that Australian economy? It's very geared towards what's happening in China. Surely that's quite a risk, having everything put towards what's happening in China.
When you talk about the resource sector, people tend to talk about iron ore and coal and those type of commodities. Our investment that we have is primarily in the oil and gas sector, so it is in terms of LNG, the LNG market. And if you look at forecasts into the future, there is an increasing gap between supply and demand in the LNG business. So we are confident that the investment that we have there is a sound investment, and we are also confident that the Australian economy is a strong economy.
So you're only going to focus on oil and gas, because surely future contracts coming up is a lot to depend on that economy as a whole.
That is true. It's not only oil and gas. We've got several businesses within the group. Oil and gas is only one of them in the LNG market. We also have a mining business, which is a global business, and we do have a presence in Australia. And the growth that we see in that business is not purely from Australia, but it is more from Southeast Asia, Indonesia, right up into Mongolia. Those businesses are doing well.
Looking at the Middle East, making a loss, if you look at the construction side of 239 million, and the profit margin there in negative space, you're looking to lay off people there. So what's the strategy? Are you downsizing further? You're looking to move out of the market at all?
Not at all. What we've done in the recent times, we have rationalized quite heavily. We've reduced the headcount in the Middle East, but we are retaining a presence there for two reasons. Firstly, to close out the subcontracts on many of the completed projects, to pursue our entitlement as far as the claim against the Dubai government is concerned on the Dubai airport.
How big is that?
I can't disclose that. What we do have on our statements, financial statements, there's 2 billion of uncertified revenue, and that is primarily made up of our entitlement on the Dubai airport, the Gautrain project, GP Mof in Australia, and we have always said that the 2 billion in our calculation is a conservative amount. So we expect to eventually recover substantially more than that.
Yeah, so that's a substantial sum.
It is a substantial sum, but the plan in the Middle East is not to aggressively grow that business. It is really scaling it back and maintaining a position and closing out the issues of the past. And it will never be a significant part in Murray & Roberts' future as it's been in the past.
Let's look at the issues closer to home. When it comes to the Gautrain, the arbitration court hearings were last year and they're going to resume this year in March. So where are we in that whole process right now?
There's several arbitration processes underway. What you're referring to here, if I listen to the timeline that you're referring to, that's the water ingress. Yeah. And that's the section of the tunnel between Park Station and Rosebank Station. The arbitration process did start in September of last year. It was not concluded then, and it will resume in March of this year. And that's where we are. We are still confident that we have delivered our obligations in terms of the contract. As we know, the system is operating fantastically well. It's within all the performance parameters that we have to meet, and we don't think there's any concern as far as water is concerned. And we will have to wait for the outcome of the arbitration process, but we think that we're in a safe space there.
You've been one of the companies that certainly has been very forthright with the whole issue around the Competition Commission, also saying that you fired people who you know were involved in collusion, anti-competitive behavior. So how long is this going to, do you have any indication how long this process is going to take until we have some clarity as to the findings?
We believe that Murray & Roberts was one of the first companies, if not the first one, to engage the competition authorities in an attempt to eradicate collusive behavior, not only from our company but also from the sector as a whole. We have participated in the fast-track application process April 2011, and we were really ready to settle with the competition authorities in September of last year. What I can say is we don't have any collusive behavior in Murray & Roberts any longer. That's been rooted out in total. There's none of that in the business anymore. From a timeline point of view, what we have seen in the press is that the competition authorities are referring to June as their target date for closing out this matter, and we are ready to engage with them and to settle.